And our next guest is tracking whether the AI boom will go bust. Joining us now, Adrian Cox, thematic strategist with the Deutsche Bank Research Institute. Good morning. Any late cycle signs that you're seeing at this point, Adrian, or we're still early? What inning are we?
Yeah, it's interesting. Obviously, you can only identify a bubble once it's burst back there in the rearview mirror. But one thing which we have been seeing is a huge bubble in the term AI bubble, in concerns about an AI bubble. And so I had a hunch about this and looked at Google Trends and saw that, in fact, there was a huge run-up during the course of August in searches for AI bubble, which then just dropped off a cliff once you'd had a peak with Sam Altman saying that investors were overexcited, and some of the concerns about the MIT study, which suggested that perhaps 95% of pilots weren't working out. So this information actually was confirmed by looking at Reddit and also at a kind of a fear index which we constructed of publications. So basically, during the course of September, something which had been absolutely peaking has now really fallen to about 20% of its level. And this could perhaps be an indication that there is a fading in some of the concerns that there were about a bubble, which again kind of raises the point of whether the only thing we have to fear is a lack of fear itself, because it is the lack of fear that can really lead to a bubble, whereas if you have a little bit more concern, then that can just take some of the edge out of it.
Yeah. I think, I guess it's like a recession, though. We talked about it for a year, and the more you talk about it, it only comes when you're not expecting it. And and bubble's probably the same way if everyone's talking about it and Googling it. Maybe we're not there yet. The thing that gets me, Adrian, is that AI is just saying that term doesn't really break down the different parts of AI that could march to a totally different drummer. I mean, the companies benefiting from the build out, they're going to build it out. I mean, they may not get a payoff. They may spend billions and billions and not get a payoff, but the suppliers, they're going to finish those contracts. So isn't that a different? Could the whole area bust, or would it be segmented on which area of AI you're trying about? It certainly needs to get better to fulfill the promise of all the money that people are spending to build it out, whether it really increases productivity and everything else. But I assume it will, don't you?
Yeah, I think if you have a look at where we are at the moment, it's almost like there's we've come to kind of an intersection in the road where there are green lights and red lights and orange lights, and you have to kind of distinguish between those. So on the on the red lights, I would say that it is reasonable to be concerned about the amount of capex that's going on, and in particular whether it's going to be possible to recoup the expenditure within the life of the chips and while they're amortized. I think there's also some concerns about the private valuations. You know, obviously you see OpenAI going up there to $500 billion, and some of the private companies, some of the public companies, but on the other hand, on the amber side, if you have a look at the CAPE valuations, for example, then typically they're showing at about kind of 38 versus the peak which you saw in the dot-com bubble, which was 44. You know, the Mag 7 is up twice in the last couple of years, but their PE ratios are still in the kind of mid-20s, mid-30s kind of area. I'd be a little bit concerned just looking at some of the cross-ownership structures, though, that we're beginning to see emerging. But all of this is counterbalanced by the fact that there is enormous demand out there, and the earnings that the large cloud providers are getting from providing AI are still increasing very, very fast. These are kind of healthy companies funding their investments out of free cash flow. This is not mum and pop, you know, back in the dot-com bubble when they were investing in new IPO companies which weren't making any money. In this case, the really big investments are on the private side by investors who are experienced and really should know better if there's a problem out there. And last but not least, I think in terms of the kind of the riskiness that is perceived in the market, you were just saying earlier that gold prices are up there near an all-time high. Have a look at what they were doing at the time of the dot-com bubble, where they were pretty much at rock bottom. So that suggests that there is some concern out there, that there is some awareness that this bubble, if it is a bubble, may burst, and people want to have a quick safe haven to run to if that happens to be the case.
So I guess we don't know. I don't know, 500 billion. I just think about when Google came public, it seemed so expensive. And what's it up, 1,000? I don't know. It probably at least valued at 1,000 times what it was valued at the time. You think 500 billion, we're going to look back and say, wow, that was way too high? Or maybe there'll be a period where we say that was way too high, and then it eclipses it as time goes by, something like that. I mean, it's a powerful tool, obviously.
Yeah, exactly. I mean, one thing that you really can say about bubbles is, number one, that they do end eventually. They do pop at some time, whether that is in a violent way or not. Number two, that on the way up, there are plenty of correction points. So when you look at the NASDAQ in the run-up to the dot-com bubble, it actually had 9 instances where it fell around 10% or more in the 4 years leading up to that moment when there was the big bursting, and then several on the way down. And the other, I guess, observation is that if you sit it out, then you leave a lot of money. You can potentially leave a lot of money on the table. So I found a great quote from someone back in 1998, November then, so 16 months before the dot-com bubble burst, who said, so this guy was an investment manager in California. He said, this is a serious bubble. This will make the 1991 biotech bubble look like a picnic. And of course, if he'd taken his money out then he would have missed all of the gains that came up. So the NASDAQ was at 2,000 then. It then eventually went up over 16 months to 5,000, fell down. It was still another year before it got down to the level that it was when this manager was forecasting that the bubble had been reached, and didn't actually fall that much further afterwards.